So this is a proposed legislation. So Australia is, instead of referring to the OECD rules as being part of our legislation, including Pillar 2 by reference, which I understand is the New Zealand approach, we are replicating, copying or rewriting the Pillar 2 into our tax laws. Now, I'll leave it to the lawmakers and policymakers to explain why this is necessary. But it was explained that the purpose of this is to bring Pillar 2 taxes within the definition of the taxation law. So practically, that means that the existing provisions, the tax administration provisions, will apply to the Pillar 2 taxes. So that includes the ATO information gathering powers, applying SGE penalties, GIC's penalties, requiring you to lodge forms, even the amendment period, for example. The underlying premise is that despite we're going to have GloBE rules and guidance, and then we're going to have our legislation and EM and rulings and guidance, the underlying premise is that they will be consistent with the GloBE rules and guidance. So how is the law brought into our legislation? There is an imposition bills which impose the Pillar 2 taxes in accordance with our constitution. And then there is an assessment bill that will assess the Pillar 2 tax. Sitting outside of it is what is called the rules or the subordinated legislation, which will be determined under the minister's rulemaking power. And the purpose of this is that to provide flexibility for whatever OECD make changes to the rules or provide certain further guidance. Importantly, the subordinated legislation includes the transitional CBC safe harbor provisions. I'll talk more about this shortly. Australia will also implement the domestic minimum tax. So in the, I would say, unlikely event that there is top-up tax payable with respect to Australian taxpayers, Australia will collect the top-up tax. So that is to protect the Australian revenue. There's also a standard 4-year amendment period, but I note that the Pillar 2 rules, for example, requires the effective tax rate or top-up tax to be recalculated if there is, for example, a DTL recapture, a DTL which does not reverse within 5 years. So I assume that there will be adjustment for this. So what are the forms you need to lodge with the ATO? So there are 3 returns. One is the Global Information Return. So this is really informational. It will not raise assessments. It is consistent with the OECD standardized form, which was published on 17 July 2023. So you can actually download that form to have a look at it. It may also contain Australian-specific amendments as well. It captures general information, including your corporate structure, and can be lodged by the parent, and then the ATO is notified of that lodgement. There's a GloBE tax return, which collects any top-up tax payable, and you need to lodge it even if your top-up tax is nil. And the domestic minimum tax return collects the domestic minimum tax. You must lodge those forms electronically, so you need software to convert the data. And you must lodge this within 15 months after the end of the fiscal year. There are conditions where it increased to 18 months. It is noted that the commissioner cannot extend the due date for the Global Information Return. So be aware of that in terms of SGE penalties.